Seguimos adelante en estas charlas de la Risk Management and Trading Conference 2024. Tengo el gusto y el honor de poder recibir a Robin Castelli, quien es cabeza de Transition Finance Investment de Orange Ridge Capital, un hedge fund de capital europeo norteamericano que está creciendo mucho y están haciendo cosas muy interesantes. Thank you, Robin. It's a pleasure to have you with us. And mostly in this moment that the whole world is in transition to a sustainable concept of finance. Thank you very much.
Thank you very much. It's a true pleasure, and I'm very grateful to Riskmatics for inviting me.
First of all, tell us about you, about your career. How did you begin in this amazing career that today, well, you are one of the most known persons all around the world talking about sustainable finance?
Well, thank you. Thank you for your very nice introduction. It's a very long story, which I'll cut very short. I started my career in my academic studies as an evolutionary biologist, molecular biology with a specialization in evolutionary biology, which is very different from what traditional people in finance have.
You usually don't see things of a quant in biology.
You don't really. But before going to finance, I was the co-founder of two companies in the robotics field, unmanned ground vehicles, one in Switzerland and one in the US, which I ran for almost 15 years. We got them to be top 3 in the world. So I had a lot of experience in startups and growing companies and all that. And then I won't go into the details of the whole entrepreneurial and private equity investment side of that, but I decided to go back to my academic studies, publish my thesis, and then enter into finance, because my wife, who is way more senior than I am in finance, she's been in alternative investments for her whole career at all the major shops, Blackstone, and all those, told me I was a quant, which I didn't believe I was. I thought it was some kind of disease. To some extent, I still think it is an affection of the mind. But I joined Citibank about almost 10 years ago. They were looking for somebody who had a different mindset from the traditional economist and physicist and all that. And I started working on systemic risk and early warning signals identification. I did a lot of other things at the bank, as Citi is very has this thing of giving people many different roles and work to do. I was the chief strategy officer for quantitative risk and stress testing, which grew to 700 people when I was also running the business unit there. I wrote a book on quantitative methods for ESG finance with Wiley. I built up the business unit for enterprise risk management. And then finally, I took over a couple of years ago the climate modeling analytics team, whose mandate was to develop, implement, run, and analyze all the models that Citi uses for the assessment of climate risk on our wholesale credit portfolio and our commercial real estate portfolio, which is about 730 billion worth of exposures, and understand the impact on a regulatory side. So the climate scenario analysis, the FRB, CSA, all of that side, but also ideally look at opportunities and see where we should be investing and where we should be working. And over the last few months, I transitioned out of the bank and into private equity to actually use the same approach and the same models to invest into the transition finance itself.
Orange Ridge Capital.
To Orange Ridge Capital, which is, it's not a hedge fund, it's a private equity firm, which is based between the Netherlands and New York and invests mostly in sustainable finance. And it's been around since 2016. So
what is transition finance investment exactly? What does it mean and the scope?
So transition finance and the investment that goes with it is actually all of the financial activities that underpin and sustain the transition from the current carbon-intensive, fossil fuel-based economy to an economy where the energy that we use is going to be carbon neutral, or ideally maybe even carbon negative. And this includes venture capital, private equity, credits, insurance, banking, everything. It is an enormous opportunity. And Secretary Secretary of Treasury Yellen was actually interviewed a few weeks ago, putting some sort of guardrails around the size of this, and she estimated this to be about $3 trillion of additional investment every year. And the type of things that are included in transition finance are very different from the pure ESG. So if we think about pure ESG as we've known it today, it's a subset of what you can invest in. It's limited by exclusionary principles. It's limited by a metric. It's a system of investing that is based on trying to not invest in certain fields, invest in other fields, and use some simplified metrics such as emissions, SBTI alignment, implied temperature rise. Transition finance is about moving the needle from the current state to where we have to be. So there's a lot of things that you can do in transition finance.
But it's not only about energy. Energy is
No,
a great,
it's not
it's
only
a
about
great
energy.
example. It's a great example, but we can use it also, for example, in plastic industries.
We can use it everywhere. So if we think about transition finance...
Whether we go to circular, for example, is part of what transition finance looks.
It's about that, and it's about a lot more. So if we look at it, and that's the way we did look at it when I was working at Citi and in my new role, we look at it in a systematic way. So we take the models that we use, the models that NGFS uses, the integrated assessment models and the climate premium models and that. And you see a series of investment theses that derive from the forward-looking models. So if we look at a net zero 2050 scenario as opposed to a delayed transition or a current policies, we see a series of pathways going into the future. And each of these will give us investment opportunities. Some of these are very obvious, like farmland in northern latitudes. With the heating up of the world, the arable land is moving northwards. So as a transition finance investment, if you invest in farmland in certain areas of the north, that is a transition finance investment. That's not an ESG investment.
How much is this approach, because this is something I don't know, and I would like to know, how much is taking the approach of the persons, of people, and how much is taking the approach of environment?
Well,
you can't
look at one without the other. So that's the beauty of using a model-based, quantitative-based approach. If you think about the way a lot of this has been done up to now in the ESG space, it's all been about gut feeling and hunches. Nobody has really looked at this in a fully systemic way. The complexity of the environment and how everything interacts together, how societies, migration, climate, all these things interact, is something that we cannot assume to understand without very complex modeling, without computational modeling. So all of these models exist and can be developed and can be developed further. And that's what I say, that the insights of what transition finance should be and how it should be done can only be properly achieved by running the models and putting subject matter expertise on the results. Now, that's not to say that the models will give you perfect insight, because you still need to have a decision on what scenario you as an investor believe is the most likely. So you might think that maybe net zero 2050 is what's going to happen. I might say, I think it's delayed transition, and another investor might think it's some other scenario. And therefore there is still a lot of room for different investments.
You know, I feel quite easy to achieve a net zero, but I find more difficult to find a perfect governance, to find a full ethics model for organizations. How do you think, while talking to ESG, is going to evolve in the future on the basis of the ethics we have to apply, also to redesign this world that all around we see how society, how people, how groups are crossing not only interests, also that conflicts are coming out, and well, we can go through a huge list, but it happens from the heart of the organizations.
Well, I think there's a big linkage between what the regulators and the policymakers do, and then what the investors in the private sector can do, and one drives the other in more ways than one. But typically, I think what we will have to see is there will be changes in regulation. There will be stricter regulations. I think one of the biggest ones will be in the form of, and this is in the models, of carbon pricing, effectively, where there's going to be, all the models give us, starting from a certain year forward, and I think this is January 2030, a steeply increasing carbon price. But the point is, what is the driver of that carbon price? And the driver of that carbon price, in my personal opinion, is not goodwill or anything. It's probably going to be the effects of physical risk. And I can give you an example of what do I mean by that. The last time I was here in Mexico City was for the conference that Banxico organized, hacia la implementación de escenarios climáticos en México, which was in October, November last year. It was supposed to be opened by the Deputy Minister of Finance, and he couldn't come. And he couldn't come because Acapulco was hit by the most violent hurricane in recorded history. Now, the number of such events is increasing dramatically year over year. We have numbers that, if we look at, for example, the United States, from 1980 to 83 to 93, there were something like $23 billion events, CPI adjusted, and in the last 10 years, that number is 173. So if something like that keeps going, as the indications are it is, there will be a point where we will have a fall of either a reinsurer or major insurers because of concentration. So in the Acapulco case, I believe there's about 6 or 7 insurers that cover the entire Acapulco real estate market, and those all reinsure with 3 insurers. You can imagine that an event of that entity put a big strain on those 3 reinsurers.
Absolutely.
If we've had a second event within a few weeks, say in Colombia, where the same 3 reinsurers are there, it could have gone systemic. And then when something like that goes systemic, that is when you have strong regulatory action. That's when you have effectively a COVID moment. If I had asked you in 2018, what is the likelihood of widespread lockdowns, mask mandates, and mandatory vaccination, you would have said 1 in 10,000, and you will have people in the streets, which is probably the same answer that people would give me today if I asked them what is the likelihood of strong carbon policies and a strong carbon price. But ask that question if once the insurers go down and there's people that are homeless and the government needs to step in to pay and rebuild, and the answer is going to be different. It's going to be a switch.
You're right. What's your forecast for the ESG evolvement for the next 5-10 years? Well, you were saying a moment ago that the main focus must be on 2030. Due to
Yes.
the world, we have talked about what we want to aim, but the European taxonomy, the current models to measure the ESG, where do we go? And we go not only as the models, as the real practice, as the convictions and the viewpoint of the organizations all around the world.
So I think.
Where do you think we go?
Yes, no, that's a very good question, and thank you for it, because I think that we are seeing a shift away from a certain type of ESG, more so in the US, maybe a bit less so in Europe, that has become highly polarized and highly partisan. And I see that the shift is going to be more towards the thematics of transition finance, where it's a pragmatic investment. It's an investment where nuclear energy becomes part of the deal, and it has been mentioned at COP recently, which is the first time this has happened. It's a focus where we're not excluding investments, but we are really focusing on where it actually matters. So brown to green is going to become a lot more important. We're going to move away from these single dimensional metrics that do a disservice to the environment and to societies, because you cannot simplify the complexities of of what it really takes to transition away from energy by saying, oh, the only thing that matters is how many emissions you have, or the only thing that matters is the implied temperature rates that you have, or how you align to SBTI. It's all of the above and more.
It's
that's
how many water you use to
absolutely
produce apples.
Thank you for mentioning water.
How many water
is
you use
key.
to produce parcel. It's one of the huge problems we have in most of the world. The 70% of the water we're using is on the field.
Yes,
We
it's
have
water,
to
it's
find
agriculture,
green
it's
ways, sustainable
regeneration,
ways
circular economy. It's all this.
to give new models for agricultural
But you cannot
production.
reduce
And
that
we
to one.
can go further
Yes.
in 100 topics.
You cannot reduce that to one metric and use it in an exchange traded fund. That is unfortunately one of the key problems that ESG as it is today has had. It has tried to simplify everything so that it could be converted in tradable ETFs. This is too complicated for that.
And the circularity of the products, it's something still mostly in the global world. To be circular, when my product is going to fly the half of the world to be with the end user, how do I am going to recover the heavy parts of my product in order to it's something still far away to happen, but wonderful to hear it.
But think about it in terms of the opportunities that this brings, the
Yes,
new
absolutely.
industries, the new work, the new job descriptions, the people that will have to be. And this is one thing, we're always thinking about the transition in terms of doom and gloom and negative things and jobs that are going to disappear and sectors that are going to go away. But nobody really focuses that much on all the new things that are going to appear. And that's really the part that we should be focusing on.
Circular networks. I have never thought about that, and it came to my mind at this moment. Probably something that we have to work in the future.
Yeah. Think about it this way. If we had the same conversation when the era of coal and steam started, or when the era of oil and the automobile started, everyone would have been concerned about, oh, jobs are going to go away. If I'm producing horse and buggies, but there were so many other industries that came up, and I think this is exactly what we're seeing. We are seeing a massive industrial revolution. It's an industrial one, and the opportunities are going to be huge. We really just need to understand it, embrace it, and, as we say, get on with it.
Something I like from the conversation we're having is to understand the new finance viewpoint on the basis of how much it helps to reduce the world's or people harm, instead of contributing to a better stage for environment or society. So that's a way to understand this. This investment has to
absolutely.
To go
but the other way is all of these theses that come into precision finance stand on their own rights. They stand as good investments where money can be made, and that is what makes them work. So we're not suspending belief in the markets. We're not saying we have to accept stakeholder theory, otherwise
we don't
this
have
doesn't
to
work.
leave our hair long.
No, exactly. We don't have to abolish capitalism for this to work. In fact, as it did for the first and second industrial revolution, it would work perfectly well with the existing framework, as long as we understand what the problem is, what it leads to, what the opportunity is, and how
where the funds have to go.
Where the funds have to go, exactly.
What can you say about the Risk Management and Trading Conference? How you feel it?
Oh, I mean,
how you feel yourself here?
I am honored and to be here. It's an amazing venue, and I'm very grateful to Alan, Baruch, and all the other organizers for inviting me. It's way beyond my expectations. It's
your opinion about the speakers, about participants, exposures.
Yes, the quality of the speakers has been top notch. I mean, world quality.
You have lived in different countries.
I have lived in many countries.
How will you compare this event with what happened in some other countries?
Oh, I mean, I lived in Italy, England, Switzerland, Chile, North America. I lived all over the place.
I have no doubt you have gone around.
And I must say that the level of this conference is easily on par with the best ones that I've been to in the US and in Europe, for bar none. It's
great,
for sure.
Thank you very much, Robin. It's a pleasure to have you here with us, and mostly it's a pleasure and an honor to hear from you and also to learn from you.
Thank you very much.
Thank you.
It's been a pleasure.
Robin
you.
Castelli, uno de
Thank you
los
very
hombres que sin duda está ayudando a cambiar al sector financiero global hacia un mundo más sostenible que nos hace falta, nos urge. Gracias y seguimos hacia adelante con la Risk Management and Trading Conference 2024. Uno de los hombres que sin duda está ayudando a cambiar al sector financiero global hacia un mundo más sostenible que nos hace falta, nos urge. Gracias y seguimos hacia adelante con la Risk Management and Trading Conference 2024.
Muchas gracias.